What's up guys, it's Michael here. In this video we are going to cover how do the wealthy become even more wealthier. So let's get into it. Before I get into it, please click the like button down below and the subscribe button so YouTube will notify you when I upload a new video. So everyone knows that when wealthy people make a lot of money, for example the ones on television, Elon Musk, Jeff Bezos, when they find out they don't pay taxes, everyone gets really angry. And they basically want to change the tax code, but yet to realize that the tax code is basically written by those people who understand how does it work. They play the rules. And you ask me, how do you play the rules? So let's keep this simple. So first thing to understand is, the more wealthy you are, the more higher chance that you can pay less taxes. Because this one specifically revolves around taxes. So if you're really poor, let's say you're making $10,000 a year, or maybe like $40,000 a year, around the poverty line. And let's put it this way, the higher you go from there, let's say about $500,000 to $1 million, that part you're still, pretty well off, but you're not the super wealthy. Let's say you make over $1 million a year, and once you make over $1 million a year, that is when you notice the tax advantage gain is starting to be significant. So to understand the two concepts is between two things. There's tax evasion and tax avoidance. Tax evasion will land you in prison. Tax avoidance will not land you in prison, but you'll get a lot of people to hate you. So basically, either or. One in prison, one you just get the public to hate you when they find out about it. So, how did he do it? So first, you gotta speak with your accountant. And when you speak to your accountant, they'll let you know how the tax laws work. A good accountant will let you know what you need to do. You basically pay them and ask them advice. What can you do to make more money? As I mentioned in all my previous videos, you have to own a business. So if you write off, let's say you make $100,000 a year, or a few friends of mine I know that make about $800,000 a year. Technically, they actually made $1.6 million, but live in California, you get chopped in half. Why is that? They work for someone else. They work for a law firm, so they make a lot, but at the same time you are still an employee. You took home an income, so you basically submitted a W-2 to the state. When you submit a W-2, it's like, hey, I work for this business, I spend my time, I show my value to them, and I work for basically money for hour. Basically, they traded their time for money. If you look at it that way, it's really taxable. That's the tax it was targeting. So the more money you make, that's spending your time as considered the definition of income, you can be taxed based on whatever tax bracket. But if you look at business, if you're basically being paid on a business style, you get taxed a lot less. The whole reason why it's generated like this has been here forever. It's to create incentives for people to do more startups, more business owners, to be more creative. That's who it benefits. So the first thing what you can do is, if you're currently working as an employee, think about starting a business. Whatever trade, whatever thing you need to do, you have to try. You're going to fail, but you have to try. Once you become an owner, this is where you take the first step on the road to success. So when you first start off, you either make no money, or most cases, you lose money. You start from there and you try to grow. Once you make, let's say, about $100,000 a year, this is where you go to your tax advisor and you ask them, how can I basically spend this whatever $100,000 without paying tax? That's the main question. Or paying little to no tax. Basically better what the employee. That's their first step, to take small benefits, because to take the big benefits like what Elon Musk and Jeff Bezos are, you have to be making millions to hundreds of millions of dollars. Then you can use their tax deduction. So when you're a small business owner, you get the small benefits. But if you're an employee, you get basically close to no benefits. So you got to work your way up. So 100K, what can you do? So as I mentioned on this video, taking a W-2 is basically you're shooting yourself on the foot. So what you want to do is ask your accountant, what can be tax deductible? How can you make everything as much as possible tax deductible? So as this current administration for the presidency, thanks to the current pandemic and ongoing pandemic forever, honestly, is they wanted to help restaurant owners and small businesses who do the restaurant industry. They're basically been shot from the pandemic. So what did they do? If you didn't really mention it, didn't really make it on news, because if people found out, they'll abuse this a lot. But a lot of people do know, but not majority. Is they basically make eating out, ordering food to go, 100% tax deductible. Don't quote me on that, but you should check with your tax advisor. Make sure they do their research and know, and do your own research. You can search this up on Google. So when you do that, everyone can start buying food and it'll be a complete write-off. That's a plus benefit for basic beginning starting business owners. Let's say you start making more money, you move up to like $500,000 a year, $500,000 a year. And remember that you're a business owner. You have registered with the state, you have an LLC, you have whatever business you have. And remember, if other people who you have a partnership with someone, and make sure when you have a partnership, make sure you own the business, because you want to keep it clean when running a business. When you have partnership with someone, they can utilize the same laws as long as their name is with you on their company. So when you look at that, what can you do when you're making $500,000 a year? You split it up, but as long as, like, basically try not to take it as income, but most likely you will have to take it as income. And you go from there. So you have $500,000 a year. Let's say you want to purchase a more fancy lifestyle, maybe a home. And how can you do it to write it off? That you got to speak for a tax accountant, but I can give out a few examples. For example, you buy a house, but you instead of buying a house for yourself, you can mix it between the two. Let's say, hi, buy this house to say, I'm doing this for my business. Oh, I'm going to have a business in this property. And at the same time, I'll be living there too. So now, after that, will be considered as a business expense. And you have a deduction right there. That means you're eating your food in that place, the car you drive, that is a deduction. So that is that's like basic example how people can get write-offs. So from that level, you move up to like $1 million plus. Now, how do people like Elon Musk and Jeff Bezos do it? Simple. So you realize when your company grows a lot bigger, instead of paying people, let's say, wages or income, another way they can do it is pay by dividends and stocks. Like, for example, what Amazon did. A lot of people complain about it because when they paid them, that wasn't worth a lot. But if you think about it, if they pay by dividends or stocks, you get taxed completely different. So basically, if you get paid by stocks and let's say you don't sell it, you're considered a stock. You don't have a physical asset cash coming in. Let's say you sell it a year later. Instead of getting taxed, let's say you had stocks, like $500,000 worth of stocks from working on Amazon. And the stock will say it was like $10. Also, it shot up to like $3,000 or $4,000. And you said, I sell it a year later. So you made, let's say, like $4 million just from working on Amazon. Even you're supposed to get paid $50,000 a year. But the stock itself raised up a lot more because it's a company. Their fiduciary duty is to help the shareholders and increase their value. So that happens. How do you get taxed on that? So that one, instead of getting taxed as like a W-2, you technically didn't take it as income because you're holding a piece of paper. You're not holding cash at hand. So you took out that $4 million. Now, how does that work? Instead of that, you technically taking out that piece of paper, convert it into money, but you held it longer than a year. So that means instead of getting taxed like the complete taxes, which is like in California, like 13%, you add federal, and it goes all the way up. You only get taxed as much as 0% for income tax in that case. And you can only take the stock tax, which is 20% at maximum. So in that case, you avoid all the other taxes, including federal, including sales, including anything else that tries to grab you. You avoided a crap ton of tax. So that's why Elon Musk and Jeff Bezos can use that system to their advantage, because they're basically following the rules of the book, which a lot of people don't know, and the only way for you to know is to go figure it out yourself. The school is not going to teach you. If they do, they wouldn't be teaching. Let's be honest there. If a teacher can find out they can make $100,000 online and pay less tax without being there in person, and don't always have to be there in person teaching the course, I'm pretty sure all teachers wouldn't have done that. Because let's be honest, teaching in school is very hard. So you look at what else did they do? How else? This is not like the whole story. And you are right, this is not the whole story. What else did they do? That took me a while to figure out, that they can take loans from bank. When you take loans from bank, he's like, what? But you're borrowing money. But at the same time they can go to the bank. It's like, hey, I got like a couple $1 billion in stock. I can pay this off. But when you take a loan from a bank, they can obviously pay it off and pay with like zero interest. And they say, hey, I took a loan. This is technically not an income. I'm just borrowing money to use for myself and pay it back later. So you think about it that way. That's actually one way I found out recently, that those people who have a lot of money can use that to their advantage. And even if they patch that loophole, think about it. If they patch that loophole, it's got to be another loophole opening it. So the people writing these type of laws are the people who have the most money, the most wealthiest people. So the interesting part is the more money you have, the less tax you pay because the better accountants will help you. But the only way for you to get started is for you to click the like button down below and the subscribe button. But all jokes aside, is actually just, start running a business, start owning things. If you don't own anything, then the economy itself, the business itself, the tax laws will not help you. You have to own things. So your first step is working a business, and if you're working a business, try to move up there, try to scale up more. And if you're just an employee, you're watching this video and you want to do better, then consider opening a business on the side and just start small. Start small and continue to grow to the point that you do not need to work in your current job anymore. That's all I got for you this video. I'll see you guys next time. Peace.